there is no change in the policy interest rate. Accordingly, the repo rate under the liquidity adjustment facility remains at 8%.
The government has to walk alone to face the challenge of growth. Well, we'll walk alone.
We are as much concerned about growth as inflation.
The standoff between the Finance Ministry and the Reserve Bank of India now out in the open, with Finance Minister P Chidambaram expressing his disappointment with the RBI's decision to keep key rates unchanged and saying the government will walk alone to address the challenge of growth. Hello and welcome. You're watching We Mean Business. I'm Shweta Rajpalkoli. On the show today, we ask what this disconnect between the RBI and the Finance Ministry means for the economy and whether RBI's decision to keep rates unchanged is going to hurt growth. Also, how long before we're going to see the central bank relenting. Let me introduce our guests on the show. With me, S Sandilya, chairman of Eicher Motors and president of SIAM, joining us on a link from Delhi. Meera Sanyal, country executive of the Royal Bank of Scotland, joins us from Mumbai. MS Unnikrishnan, MD of Thermax, will also be joining us shortly. Also, Dr. Brinda Jagirdar, General Manager and Head Economic Research of the State Bank of India, joins us from Mumbai as well. Many thanks all of you for being with us. But before we start the discussion, let's take a look at both sides of the story and what the Finance Minister and the RBI Governor had to say today.
Growth is as much a challenge as inflation. The government has to walk alone to face the challenge of growth. Well, we'll walk alone. Government is doing its best to send a clear message that we are on the path of fiscal consolidation. And it is my hope that everyone will read and understand government's commitment to fiscal consolidation. I haven't read the last few paragraphs of the statement, but if it holds out hope for the future, I look forward to that future. Sometimes it is best to speak, sometimes it is best to be silent. I think this is a time for silence.
Well, I think both the government and the Reserve Bank share concerns both about growth and inflation. We are as much concerned about growth as inflation. Only our balance has been shifting. And about the finance, if you're asking about the nuancing of the finance minister's statement, I think you should ask him.
Mrs. Meera Sanyal, the Finance Minister says it's better to be silent, but he's still said it all. Today's decision to keep rates unchanged has obviously made him very, very unhappy. Your first reaction?
Well, Shweta, if there was ever a time to say that we had an independent central bank, this is it. I think it's been very, very clear that the Central Bank of India is functioning completely independently, despite the very clear signals they had received from the Ministry of Finance yesterday. Having said that, in fairness, I think the Governor was very clear in his stance today. He has acknowledged the steps that the government, the Ministry of Finance, has taken, and he has said that this will open up space for the monetary policy to work in tandem with the government. I think what the Reserve Bank is saying is that they do want to see actions that go with the words which have been stated. And that is a very fair message. Don't forget that heading into 2013, we are looking at a fairly interesting situation. It is going to be election year for the government, and their ability to follow through on some of their statements may be limited. So the Reserve Bank of India is very, very clearly signaling that they do expect the government to continue on the path of fiscal consolidation. And that's a very fair message for them to be giving, and certainly one which is good for the country as well.
All right, I think it's a very valid point that Mrs. Sanyal has made there. The fact that if ever there was a time when we could say that yes, the Reserve Bank of India functions independently, perhaps today is that day. Despite all that pressure that we've been seeing on the Reserve Bank of India governor, he has not decided to give in. And that speaks volumes of that institution that we're really talking about. At the same time, a disconnect like the current one clearly doesn't bode well for the economy. Mr. Sandilya, would you agree?
No, I don't think so. And I think if I look at it, I totally agree with what Meera Sanyal had to say on the RBI's independence. No doubt about it. However, having said that, we were anticipating at least about 25 to 50 basis points reduction, not so much in terms of any impact on the economy, basically in terms of improving sentiments. I don't think a 25 50 basis points reduction in the interest rate would have done any major impact on the economic growth. However, but I think the RBI governor, rightly so, is waiting for the implementation of the intentions of the government. Yes, the government has talked about a lot of things in terms of reforms, but I don't think anything has been seen on action on the ground. And I think it seems that the RBI governor is waiting for the implementation of the intention so that there is fiscal control, there is intention towards reducing the deficit. And that's, I think, very important. However, what is very important that the government can do is take steps for economic growth. One doesn't see that. These reforms announced are not necessarily impacting the growth immediately. Things like exports are slowing down, but we have seen a tremendous reduction in the duty drawback rates. And I think that is not the following step of improving exports of the country, which could again augment the economy. We talked about a lot of reforms which are medium term, like the GST introduction. He says it will be done. I hope it gets done, at least effective 1st of April. We thought it could even happen advanced to October or something. But then I know there are impediments, there are problems, the state's not agreeing. All that is in the process. But I think things like GST introduction, improvement in the implementation of the infrastructure programs on various factors, the mines getting opened up, these are all critical things which can be done in the medium term. Some of them are even short-term steps. Unless that is taken and we pump in money in the system in terms of infrastructure investments, like the JNURM scheme we talked about, the money has not been pumped into for the state undertakings to buy the vehicles in the market. So auto industry is also going through major downturn. We don't even expect the festival season to give any major improvement in the vehicle sales. So given all that, I think government needs to look at this and take steps which will help in investment improvement, help in economic growth. And RBI step in, they have released some money in terms of the CRR reduction of 25 basis points, about 17,500 crores will get released.
With the cut in CRR, that's right.
Yeah, but then auto industry is not having problem with liquidity. That's not the issue.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display, full screen view, faster response time, and Sudoku. NDTV's new iPad app. Download now.